Welcome to my next video. In this video we will talk about how to invest. Specifically, how to buy an asset allocation. This video is part of a 6-part series of videos on how to be a better investor. I highly recommend that before you take any actions based on this video alone, you first check out all the videos in this series. But first, what I say in this video is based upon my education, my life experiences, and my set of values. What I say is for typical people in typical situations. It is not for all people in all situations. If it was, this video would be hours or even days long. My goal and hope is that by the end of this video, you will know more about how to invest so that you can make better decisions in your life. Once you have decided what asset allocation you want, a good way to buy that asset allocation is to buy mutual funds. Mutual funds are not an asset category. Mutual funds are just a way for you to buy different asset categories. For example, if you buy a mutual fund that owns stocks, effectively you are buying stocks. If you buy a mutual fund that owns bonds, effectively you're buying bonds. Here are some good things about mutual funds. Generally, they're liquid. You can cash in your investment at any time. Mutual funds have professional managers who are busy managing your investment full-time. Even if you just invest a small amount of money in a mutual fund, you have effectively bought many different underlying investments, and you are instantly diversified. Here are some not so good things about mutual funds. Those professional managers at the mutual fund, they want to get paid for their work. So, mutual funds have costs. Those costs take away from your investment return. Also, you have to pay income taxes on your share of the mutual fund's income. Another good way to buy an asset allocation is to buy exchange-traded funds, or ETFs. ETFs, like mutual funds, are not an asset category. Like mutual funds, ETFs are just a way to buy different asset categories. If you buy an ETF that owns stocks, effectively you're buying stocks. If you buy an ETF that owns bonds, effectively you're buying bonds. ETFs have all the good and not so good things that mutual funds have. If you compare an ETF with a similar mutual fund, generally the ETF will have a little lower costs and you will pay a little less in income taxes. An ETF is basically a mutual fund that trades on the stock market. Historically, when you bought an ETF, you also had to pay a sales commission. So historically, the use of ETFs was for big purchases of investments. For small purchases of investments, you historically bought mutual funds. You avoided the sales commissions. That's historically. What about today? Well, today you can buy many ETFs at many big low-cost brokerages and not pay any sales commissions. So, how do you decide whether to buy a mutual fund or a similar ETF today? Well, when you make bigger investments, generally an ETF is slightly better. The lower costs and less income taxes of an ETF are more important than any sales commission you're going to pay for the ETF. What about smaller investments? Well, if you have to pay ETF sales commissions, then generally a mutual fund is slightly better. The ETF sales commission is a bigger thing than the lower costs and the less income taxes. On the other hand, if you do not have to pay ETF sales commissions, then Generally, an ETF is also slightly better for both bigger and smaller investments. Whether you buy a mutual fund or an ETF, one decision you need to make is whether you want to buy a fund that invests actively or whether you want to buy a fund that invests passively. Let me try to explain the difference. Active investing is where a fund tries to get a higher than market return. Passive investing is where a fund just tries to get the market return. So for example, an actively managed fund that owns U.S. stocks will try to get a higher return than the U.S. stock market return. A passively managed fund that owns U.S. stocks will just try to get the U.S. stock market return. Somewhat surprisingly, it turns out that over time, it's really hard for actively managed funds to consistently get a higher return than the market return. For one thing, actively managed funds tend to have higher costs than passively managed funds. So it turns out to be expensive to try to beat the market return. For these reasons, I highly recommend that you consider buying passively managed funds rather than actively managed funds when you buy funds for your asset allocation. I also recommend that you buy funds with low costs compared to similar funds. If your costs are 1% a year to invest, that doesn't sound like a big deal. 1% seems like a little number. But remember from a prior video what the investment returns are over the long haul. The investment returns from bonds are only about 2% or 3% more than inflation. The investment returns from stocks are only about 7% or 8% more than inflation. If your investment returns are going to be somewhere between 2% and 8% over the long haul, and your investment costs are now 1%, that 1% is a big deal when you compare it to 2 or you compare it to 8. That's why I recommend you buy funds with low costs. For similar reasons, I also recommend that you buy funds that do not charge you what is called a load when you buy. A load is just another word for a sales commission that you pay. And any sales commission you pay is just going to take away from your investment return. There are plenty of passively managed, no load, low cost mutual funds and ETFs out there for you to buy. In this video, we learn more about how to invest. Specifically, we learn more about how to actually buy an asset allocation. This video is the 5th video in a 6-part series of videos on how to be a better investor. If you want to learn more, be sure to check out the other videos in this series and my other videos on many other topics. Until the next video, always remember that you are the best person in the world to decide what is important in your life. Thank you for watching. Please click the button to subscribe. I hope that you got something from this video. If you did, please give it a thumbs up and comment. Please check out my channel, playlists, and other videos. Have a great day.